All right, things are not looking good for Pfizer. There's some major selling pressure, and you might say, this is bad news, especially if you're an investor. So, in theory, as an investor, yeah, it's bad news. As a regular human and consumer, this is actually good news. Because what's going on is when we're looking at Pfizer right here, it warns that revenue could fall, after it resets 2024 COVID expectation. So, what it's saying is that less people are probably going to get COVID or need the COVID shots. And when you think of it that way, this is good, right? Because, less people will be sick. But from a stock perspective, it's not good news. From a stock perspective, they're going to make less money. So anyways, this is what's going on here. The stock is down quite a bit. When we're looking at it, we're down about 8%. Here on the day, so down $2.37, so down about $8. You got Johnson & Johnson also down, Abbott Labs. Amgen's actually up a little bit. So when we start looking and checking these things out, this stock is down quite a bit. And what I want to show you here is, even if you look at the weekly or the monthly, looking at the monthly, what you'll see is here's around the COVID time, how these shares skyrocketed or, did pretty well for a drug-related company. But now after a lot of people are just, okay, kind of over it, or just less people are dying over things. It's less in the news. Less people might need these kinds of things. The stock's having some trouble. So it's toast today. So when we look at it, you're sinking quite a bit. And they made this announcement. Usually they do this in order to curb kind of expectations. So that way, when earnings do come out, things are not as bad or as nasty during earnings. So it kind of spreads the price risk across, call it multiple months or multiple weeks, in other words, because the earnings look like they should be set to come out right around February, end of January, so 1/30/2024. So they kind of do this in order to maybe curtail some of those expectations and not be as nasty. So anyways, the stock is not doing so hot or so well. It's been kind of on this decline. If you look at Moderna, also very similar kind of to this decline. You look at the rise of this company and just how exponential it was. Very powerful. And then now we've been kind of going down since 2022, 2023. It's been going on a downtrend, right? You got the COVID thing that was here. Oh, yay, great party, celebrate for the stock. And now it doesn't look very good. So, looking at overall the trend, the trend is to the downside. When you're looking at this one and looking at Pfizer right now as well, very similar. So I think these paying dividend wise, when we look at Pfizer and we just check out the stock itself, the dividend on this is quite nice. You're yielding about 6.25% over the course of the year. However, the downside with that is this: the stock is going slightly to the downside. So anyway, that's something you got to play with. Don't put all your eggs in one basket. Spread your money, and if you've got this one for dividends, you might have to hold out. Long-term wise, looking at it, from 2009, some of the lows was right around that $12 range. You can see how overall the trajectories has been pretty nice. And here's kind of the overhead resistance. So this stock over the course of, call it 25, 30 years, has been between this $12 and $50 range. Now you're kind of actually right in the midst of that equilibrium, or in the middle, call it the mean or median area. It's not split adjusted obviously here, or it is split adjusted. So you're kind of right in the midst of it. And I don't think it's going to get way down into 12 zones. That's more like market panic. But as for looking at it from a longer term perspective, we're already hitting this level. This support line is very critical at this zone. And the next one beyond that, I would say, is looking at around that $20 price point. That $20 will be important. You've got some areas there. And you might say, well, why are support and resistance levels important? Why is it that you're watching these things? Well, what happens is that people that bought in these areas, long-term investors, are like, well, maybe I'm ready to cash out. Maybe I'm ready to retirement. So you have selling pressure coming in, especially if the stock is going down. You also have selling pressure coming in from the shorts. Right, so you got shorts coming in, you got people that bought over here coming in, you got people that are panicking up top as well that are dumping the shares maybe from there. So all that pressure leads to more selling. Anyways, that's what I've got for you today on Pfizer. I'd be a little bit more careful on this one. Right now, if we can't hold that support around that $25 level, which we're still about a buck away because the stock moves slow, and it's going to take multiple weeks to months to really see if this pans out. So if you can't hold that 25, the next spot to watch is probably right around that 20 because you've got some swing points in the year 2011 over in that area for that as well. All right, thanks for joining me. Don't forget to check out our website, grab some of the freebies there. Much more to learn and continue to grow your knowledge, education, and so forth. I'll see you in the next video. Take care.